NIO stock has been under pressure recently, slipping below that $6 mark to close at $5.95 on Friday. That move captured plenty of headlines, because $6 had become a psychological anchor for investors. But while the stock is wobbling in the short term, there is a bigger story unfolding that may soon reshape how investors think about NIO. That story is NIO Day 2025, an event scheduled for September 20th in Hangzhou, China, that promises to showcase NIO's future and potentially reset market sentiment. In today's update, we'll take a step back from the daily price action and instead look ahead. We'll talk about what to expect from NIO Day, why the third-generation ES8 SUV is such an important launch, how Firefly and Onvo are expanding NIO's global footprint, and what catalysts could matter most in the weeks ahead. At the same time, we'll keep our feet on the ground, acknowledging the risks of intense price competition, margin pressure, and the slowing Chinese economy. The goal is to balance optimism with realism, because in the EV market, that's the only way to stay grounded. Let's begin with the big event itself. NIO Day 2025 is set for September 20th in Hangzhou, a major city known for its tech culture and automotive significance. For NIO, this annual showcase has always been more than just a press conference. It's a chance to unveil flagship models, highlight technological progress, and inspire both customers and investors. Previous NIO Days have included the launch of the ET7 sedan, the EL7 SUV, and major updates on battery swapping. This year, expectations are high because the company is planning to reveal the third-generation ES8 SUV, its largest and most premium vehicle to date. Why is the ES8 so important? In short, it's positioned as the crown jewel of NIO's lineup. The ES8 is a full-size, battery-electric SUV aimed at the premium segment, a direct competitor not only to high-end Chinese EVs but also to Tesla's Model X and other international players. By offering luxury, technology, and size, the ES8 is designed to capture higher-margin customers who are less price-sensitive than buyers in the compact or mid-size segments. If NIO executes well, the ES8 could become both a halo product for the brand and a serious revenue driver in global markets. Reports suggest that pre-orders for the ES8 have already opened in China, with strong early interest. Pricing, especially with NIO's battery as a service option, makes the vehicle more accessible while locking customers into recurring subscription revenue. That's a critical part of NIO's strategy, using the battery swap model not just as a convenience feature, but as a way to build long-term customer relationships and steady cash flow. In a market where price wars are squeezing profits, that kind of recurring revenue could make a big difference. But NIO Day won't just be about one vehicle. It's also a chance for NIO to highlight the progress of its sub-brands Onvo and Firefly. These two names may not be as familiar to international investors yet, but they are central to NIO's global expansion plan. Let's start with Firefly. This brand focuses on the premium compact EV market, smaller vehicles that are affordable but still carry the NIO design language and technology DNA. Firefly has already begun deliveries in China, and rollouts across Europe, Latin America, and Southeast Asia are underway. The strategic idea here is simple: enter markets where demand for affordable EVs is high, capture new demographics, and expand NIO's footprint beyond the crowded Chinese luxury space. Then there's Onvo, which targets family-oriented vehicles. The Onvo L90 SUV, for example, is designed to compete directly with Tesla's Model Y but at a price point that appeals to a wider swath of consumers. Onvo is key to NIO's efforts to diversify revenue streams, not just in China but in overseas markets where family SUVs dominate. NIO Day is expected to highlight these brands alongside the ES8, showing that NIO is building a multi-brand strategy: premium luxury with NIO itself, compact affordability with Firefly, and family-focused practicality with Onvo. Together, these brands give NIO a broader portfolio to compete across multiple segments and geographies. Of course, all of this is happening in the context of a fiercely competitive EV market in China. August 2025 saw record deliveries across the board. NIO delivered over 31,000 vehicles, a 55% increase from a year earlier, setting a new company record. But BYD, Tesla, XPeng, Li Auto, and even Xiaomi are all battling for share. The common thread is that sales volumes are climbing, but profitability is under pressure. Automakers are slashing prices to win customers, and while that boosts delivery numbers, it erodes margins. That tension is at the heart of NIO's investment case. On the one hand, the company is proving it can grow volumes at a rapid pace. Deliveries are up double digits year over year, and guidance for the third quarter is around 89,000 vehicles, which would set another record. On the other hand, average selling prices have fallen, from $38,000 last year to about $31,000 today. That squeeze means NIO has to rely on scale and efficiency gains to offset lower per-unit profits. The cautiously bullish argument is that NIO is already showing progress on this front. In its second quarter results, the company reported revenue of $2.7 billion, a narrowed loss of $567 million, and gross margins of 10%, slightly higher than last year. These aren't blockbuster numbers, but they point to incremental improvement. And with volumes rising, the potential to improve margins further through scale is real. Analyst sentiment reflects this balance between risk and reward. Citi maintains a buy rating with a target of $8.10, pointing to expected improvements in margins and cash flow. Bank of America is similarly bullish, targeting $7.10. Even more cautious voices, like Freedom Capital Markets, have raised their price targets to $6.50, acknowledging that fundamentals are improving. The consensus is not that NIO is a guaranteed winner, but that it has a credible path forward if execution continues. So, what should investors watch for at NIO Day? First, the details of the ES8 launch. Pre-order numbers, pricing strategies, and availability timelines will all be closely scrutinized. If demand is strong and the company can show it has avoided margin-eroding discounts, that will be a positive signal. Second, any announcements around battery swapping expansion. NIO already operates one of the most advanced swap networks in China, but investors will want to see how the company plans to extend this model globally. New swap station deployment targets, partnerships with governments or infrastructure firms, and innovations in battery technology could all move sentiment. Third, updates on Onvo and Firefly expansion. Clarity on overseas rollouts, distribution partnerships, and market penetration will help investors gauge how quickly these brands can contribute to revenue. And finally, watch for guidance updates. NIO has guided for 89,000 deliveries in Q3, but if NIO Day gives the company enough confidence to hint at beating that number, it could be the spark the stock needs to reverse its recent slide. Now, it's important not to get carried away. There are still plenty of risks. The Chinese economy is slowing, consumers are feeling the pinch, and EV subsidies are fading. Price wars are likely to continue, and profitability will remain elusive in the near term. Even with new models, NIO will need to balance growth with financial discipline. Investors must remember that execution, not just excitement, will determine whether the stock climbs from here. But here's the cautiously bullish takeaway. NIO Day 2025 is a chance to reset the narrative. Instead of focusing on whether the stock is trading at $5.95 or $6.20, the spotlight will be on the company's future, its products, its strategy, and its ability to innovate. If NIO can deliver a compelling vision, backed by real numbers on deliveries and margins, it could reignite investor enthusiasm and set the stage for a rebound. So, as we head into the weekend, think of NIO as a stock caught between short-term pressure and long-term potential. The short-term pressure is real, a close below $6, intense competition, and macro headwinds. But the long-term potential is equally real: record deliveries, incremental margin gains, a differentiated battery swap strategy, and now a flagship event with the launch of the third-generation ES8. The story of NIO has always been one of volatility. It has highs and lows, setbacks and breakthroughs. But for investors willing to take the long view, NIO Day 2025 could represent an inflection point. Not because the event alone will fix all challenges, but because it will showcase whether NIO still has the innovation and execution to carve out its place in the most competitive EV market in the world. As always, this isn't financial advice, just analysis to help you think through the latest developments. Do your own research, weigh the risks, and decide how NIO fits into your strategy. But one thing is clear: the next few weeks, leading into and following NIO Day, could be decisive for how this company is valued in the market. Investors should be paying close attention.